The current Bitcoin price today is $23,860, and we do have a whole lot which we have to cover. Let me just quickly share my screen over there. All right, so first and foremost, I wanted to get into this because we have had the prior 2-week candle which closed, and this is the logarithmic growth curve on Bitcoin using the Brave New Coin index. So that gives you an aggregated historical data point for Bitcoin. And historically, I've shown before that we spent 10 weeks outside of this before getting back in. Then we spent 8 weeks, and now it has been confirmed that we are again on the next 10th week that's closed outside of this. So the question is, we have 10 more days to go. Let me know in the comments, do you think that Bitcoin is going to break back into the upper band over here, or the lower band, which is coming in at 26,600, and then resume back into a bull rally? Or is this relief rally over? Let me know in the comments what your thoughts are, and we will analyze on the lower time frames what we think is exactly going on over here. So looking at Bitcoin on a weekly chart, essentially this is still within the range. So I did mention to you guys yesterday, is everything good, James?
All good.
I did mention to you guys yesterday that, look, if we break below the mid-range and start to hold there, then you can start to target down towards the low range. And now we're coming in towards that 200-week MA, which we know has been a very, very important place for Bitcoin to bounce off historically. And we spent quite a bit of time under there. So losing this will bring quite a lot of fear back into the market. That's coming in at $23,000. And I mean, personally, I'm running short positions, and I'm going to show you more on the daily charts and the 3-day charts the reason why I'm looking for a swing short position. And I am expecting at the very least, a retest of that weekly range low, which is coming in at $22,668. But with that being said, the Fed minutes is in off of yesterday, and basically, to conclude, what they basically said in a nutshell is they were more dovish, meaning that they weren't looking to be too aggressive, and they were insinuating that the next rate hike will be 50 basis points, whereas the previous ones that we had were, of course, higher than that. So that would signify that the Fed are potentially pivoting, and that would create what should be a risk-on environment. But I'm more of a data-driven person, so looking at the data, I have this chart over here, which is the Fed funds, and essentially we've been looking at this. Let me show you first on the monthly chart, and then we'll lower it down into a lower time frame. It's in this expanding megaphone pattern. And we said, look, anywhere within this yellow circle is the area where we could expect that the Fed would most likely pivot, but it is still in a straight uptrend. So I've moved it onto a weekly chart, and we will keep an eye on this. Not too much has changed yet, but you can see it has had a small tick down. What I would say to this is I'll put in a trend line, and any break underneath this level over here would pretty much signify that maybe the top is in on this Fed's funds pivot sheet, and therefore we could start to agree and say that maybe the Fed has pivoted and we are looking for low prices. If this starts to turn back down and come towards the bottom of the megaphone, that would be a full-on back on risk environment. But at the moment, the most important thing that I'm looking at, well, it's two things. It's the daily chart, and the second most important is the stock market. And having a look at the stock market, this is what you can see over here. So let me just expand that. So for the NASDAQ, look, it didn't quite make it all the way up to the top of its 200-day moving average, which if you look at the S&P 500 futures as well as the normal S&P 500, it rejected off of that level. But nevertheless, I did mention on many of the previous shows that this region over here is typically where you're going to expect for a mega bull trap to be formed. So if there is going to be a bull trap that is going to be set, it's going to happen anywhere within this area. I was thinking that the NASDAQ would at least spike one more bit higher like that, which would take Bitcoin up with it and possibly reach that anywhere between about $25,000 and $28,000 for the Bitcoin price, but that hasn't happened. Everything good, James?
Yeah, it's just cutting at the top level.
Sorry, we're experimenting with new microphones. Just give us a second. Let him just adjust that. Testing. Let us know in the comments how that is. All right, are we good to go?
Yeah, I think go for it, brother.
Studio problems. All right, so let's continue on over here. So I am expecting a potential deviation off of this area over here. You can see selling pressure has started to enter into the market, at least within the stock market. S&P 500 gives a much more clear picture over here. This is the futures chart, and look, wicked straight into that 200-day moving average, the yellow one, and rejecting off of that. Yesterday's candle took out the previous day's low, and that's not what you really want to see. I mean, if this candle takes out this low over here, then I would say with high probability that you probably are going to deviate back below the orange horizontal trend line over here, which is the main pivot point that I'm looking at. A break back below that area would confirm to me that we are going much lower on the stock market, and therefore that is going to, of course, affect crypto. And this ties in with what I am seeing on crypto price as well. So,
Try something complete.
all right, James is just experimenting. He's right next to me.
Let's see. Is that better now?
I don't know. You tell me, James.
Uh,
Testing.
Okay,
How's it going?
best we can
Okay, guys, best we can do for now. We apologize if the sound is not perfect, but okay, looking at the VIX over here, the VIX is contracting again, so signifying that the big bad move has possibly not happened yet. In order to verify that the move is taking place, and I'll show you what I used for crypto to as a similar signal system to what the VIX is, but you're expecting a potential push down into this area over here, and then when you start to see this expand towards the upside like that, that would likely signify the next big move for the stock market. And an increase in the VIX is usually a decrease in the stock market. You can also look at things like the yields. Let's have a look at the yields. I haven't looked at them for a while, so we'll look at the 30-year yield. 30-year yield is kind of still stuck within a range. So the main range is between, of course, this level over here, and we're stuck within this level over here. So this might become a ranging environment over the next couple of months. But any break above this horizontal box that I have over here would be very, very bad for crypto. And consequently, on the other side, for the bullish case, any break below.
People are complaining that your mic quality sounds terrible.
yeah, well,
James' work done.
No idea what it is.
How's it now? Is it okay, James?
It's making a crackling sound and checked everything.
Let me just check this over here. Okay, guys, let us know in the comments how bad it is. They were just testing the studio out, and we really apologize for that. I see the slight buffer in the mic. Why are you dissing James? I'm not dissing James. It's actually James' birthday today, so wish him happy birthday. All right, guys, I'm going to continue on because unless I see some people are saying mic's fine, sound is sweet. So I'm just going to continue on over here. If there is any other issues, then let us know. James will pick it up. So picking up off of the 30-year yield, I'm going to go on to the 10-year over here. So 10-year looks like it is potentially breaking down. We did have that head and shoulders pattern, which I think was also showing, but that has been invalidated because it is picking back up. So now we need to watch what the 10-year yield does in relation to this area over here, which is coming in at about 3%. Any sort of push of the 10-year yield back above that zone over there would start to re-establish another uptrend, and that means that crypto will struggle in that type of environment. So moving on, look, I don't want to be all doom and gloom, but these are relevant things to look at when the market is in a very pivotal point, which it is right now. And Justin over here, he says this is mind-blowing. The S&P 500 is mimicking the 2008 crash. Even the timing since the all-time high is nearly identical. The bottom is not in for stocks or crypto. So he's showing over here from a timing perspective that essentially there was 318 bars since the all-time high, and then the 2008 crash started to take place. And if you look in relation to that, you have the down thrust, up thrust, rejection of that, down thrust, up thrust, and this is exactly where we are right now. It's 309 bars, which from a timing perspective is very, very similar. Okay, we have the whole team in here. Here comes Run.
Hold on, try something. Try something.
Okay, let's see Run's magic trick here. Testing, 1, 2, 3. Are you using that one now? How's that, guys? See, some people are saying the sound is perfect. Testing. Is that good?
Sounds good to me.
Rand's magic's hands worked. If only they worked on trading, they say. Okay, guys, let's continue on. That should be fine now. We've switched to a different mic. Thank you for your patience, by the way. Okay, so as I just mentioned, look, from a timing perspective, we exactly on track. So if you go onto that S&P 500 over here, what I'm showing you over here, this area over here, according to Justin, is pretty much exactly 309 bars since that all-time high, and that is in relation to, on the right-hand side, this 318 bars, which means that you kind of want to be in a capital preservation mode at the moment. You don't want to be going into heavy risk on looking for major long-term swing plays for your trading portfolio or for your investment portfolio. It's better to wait that out. So Michael J. Kramer as well, he says updated the S&P 500 to, okay, runs back. What now, Run?
Hi, Carl.
How's it?
How are you?
Good, in you?
Can I just
Yes,
check something here?
of course you
Do you
can.
mind if I just check something here? Just hold on, just checking something. Are you still ranked 1,362?
I'm building a position right now as we speak, which we're going to get to shortly.
You ranked 1,362.
I'm building a position which is going slightly against me, but there's still time.
I'm going to bring my laptop here. Just 1 second. Just a second.
Okay, bring it. We'll talk about the trade that I'm busy building now. It is on Ethereum, and I am looking at Bitcoin as well on the shorter term time frames. We'll wait for Rand to bring his laptop. In the meantime, I thought this was quite okay. Well, on the Michael tweet over here, so the S&P 500 in 2022 versus now, you can see the similarities, which is why my bias is more towards the downside risk to reward. From a risk to reward perspective, I am building a short position, and I'll reveal that position to you in just a second's time. I found this funny from Romano, which shows the NASDAQ and Bitcoin had finally decoupled. Okay, let's see.
Can you see that?
But can we ask a question? Which account is that? Because we do know that you have
This
two
is
running.
my account that's short. Okay, I just want to show you. I've closed some of my shorts. I want you just to see how brilliant I am. Look at my profit, my P&Ls. You see
They're
my
green,
P&Ls,
you can't see
You see,
them.
because it's a green screen, you can't actually see because all my trades are green. You can't even see the screen. It's a green screen. You see.
There's plenty time. Don't worry. Yes, Sheldon as well.
Yeah. You should let me. You should let me do this show, bro. Because I mean, I'm the trader now.
Okay, we'll see.
I'm the trader now.
What Rand does is he tends to swamp us all with work, and then he just sits there in his office and trades all day. That's actually what's going on. And he has two accounts, one running long and one running short. So he can't lose, actually. It's pretty smart. That's how you hedge.
Bro, there's so much green on my screen. Look at it, that you can't even. Oh, I'm trying to show you all something, right? I'm trying to show you something. There's so much green on my screen that you can't even see how up I am because it's so green, because this is a green screen. You see?
What's crazy is that's only, 19%, and it puts you in the top 100.
Well, it's not really, because this trade was 37% up, this is 86% up, this is 118% up, but I had too much money. I had too much money in my account.
I think that's my problem as well.
And now, you see, look here. You see, I'm 122.
So guys, basically Run is 19% up, and it puts him in place in 122 or 122nd position, which means that if you can just get to at least 30% profitable, you should at least be in the top 50.
Bro, hold on a second. Let's not aim to get percentages. Let's just hold on. I want to see something here. For you, I think it's better to just get back to zero, because you see, you at minus. You see, you have a minus.
You can see that I'm in a trade. I was minus
I know,
12,
but you
now
minus,
minus
bro.
9.
You minus.
Because I'm busy building a position. Don't worry. I know exactly how this works.
You should try and get to zero, and then you should try and beat me.
Okay, we'll get there. We'll get there. We have 3 weeks or something. Sheldon and I are being put under heavy pressure here by Run. We're gonna. This is why Sheldon's not doing his show today, because he's coming up with a plan.
Bro. We know what we're doing. We know what we're doing. We're coming back strong.
Sheldon, bring your computer here so we can see how what your ROI is.
I'm doing better actually.
Are you better than minus
I've
9?
recovered.
You've recovered?
Yeah.
What are you on?
I'm in the top 300, I think.
What?
From today, or what?
Like, oh man, I better go do some work.
Okay, guys, let's get back into it. So, going on to Bitcoin on a 3-day chart. So this is one of the primary reasons for building a short position. If you just take a look at this chart over here, let's grab a horizontal. I'm sure you can all agree with me. This area is going to be tough resistance, right? So anywhere that you can build a position within here, which I don't think that we're even going to make it there. And the reason being is because if you do look at the momentum oscillators, Stoke RSI, this system that I use over here, Fisher distance from the EMA, these are all turning over. Now, this talks to the time frame of about, I would say, the next 2 to 3 weeks. This will play out over the next 2 to 3 weeks. And so far, it's looking like this is rolling over to me, and I'm going to give you daily timeframes as well as a confluence. And you have to ask yourself, where is the next major area of support? Well, we did see that this was somewhat of a support, which is why you had that wick, right? So you had a little bit of a wick reaction off of that zone. And the next is going to be over here. I mean, this is realistically what we're looking at if you are going to be playing this from level to level. So with that being said, it looks something like this. Okay, so either price manages to start rallying quickly, as in it has to start rallying today, and it can just let me remove that, and it's going to target back up towards the top over there. Or if it starts rolling over now, you kind of look at this as a range. That's your top of the range, that's your bottom of the range, and currently where we're at is more or less mid-range, which means that price is struggling to get through the mid-range, and it's deviating above, and it could come back down to the bottom of the range. Now, I don't want to say now that all of a sudden it's gonna wipe this out and get to this area. What would happen is if it does get below here and then it starts to reject onto that zone, which is around the 18,000 level, starts to flip into a resistance, then yes, then you can start to target the next support level, which is going to be around 11 to 12K. But if what all these guys are saying, Justin and Michael, if what they're saying is true, and this is the state of the stock market at the moment, then that's a real possibility. I feel like looking at a 10 to 11K Bitcoin is not completely out of the question. I mean, if things get that ugly, it could actually even go deeper than that. And that's why you have to ask yourself what sort of category you fall in and what sort of money you're dealing with. Because if you are looking to build generational wealth and you're dealing with retirement type of money, then I wouldn't even think of buying now. There's no way. Rather wait for an established uptrend where the market is going to be poised in a much safer position. Something like this where you start to establish an uptrend and you're crawling up. Right now we're in an extreme downtrend, and that should be very easy for anybody to see that's an investor. Now, if you're a short-term trader like what we're doing in this competition, then you can play it both ways, long, short, it doesn't matter. You can scalp in, out, but I'm gearing up more for a swing trade. So, and this might be one of the last swing trade opportunities that you get to the short side, because then the risk to reward starts to become dangerous on the short side. So Looking at this chart over here, now this is what also gives me confidence, and I have shown you this chart multiple times. You had the RSI, which broke down back on the 5th of April, and this is essentially where you had that massive bull trap at $47,000. Everybody decided to go long then. That broke down, and it led to a major downswing over here. Bear in mind also you have the diagonal, which was acting as a resistance zone. Then same thing over here happened on the 7th of June, the 8th of June, exactly the same thing. Broke down the RSI, broke down the diagonal that was holding a support, bear flag confirmed, sent price down. Now this one formed more into a rising wedge pattern. And I think that a lot of people are underestimating the danger of this situation from a bullish perspective if you are looking to go long into this environment. Yes, short term as a day trader or a quick scalp trade, definitely there can be long positions. I'm not talking about that. I'm talking more to those of you who are looking to hold your positions for a couple of weeks to a couple of months. Have a look at this. So if you compare this in relation to this zone over here, RSI started to break down, right? You had that candle over there. Look at that. You have that candle over there. The only thing that's going for this is that, yes, it is holding above that white 34 EMA, which has historically been important. But this thing can get moving quite quickly. And this is all just about risk to reward. Do you really think that from a risk to reward perspective, you have a confirmed rising wedge, which we know has a high probability of breaking down, then breaking up, and you've now closed 2 daily candles outside of that wedge? I don't think it's an environment to be going long in, and if anything, I'd rather be building a short position, which is exactly what I'm doing. Now, with that being said, if you start to break below this zone over here, which is your previous daily higher low, it's coming in at 22,400, then that would be your confirmation. Oh, Rand forgot his phone. I closed all your trades, Rand.
Trades? How can you close my trades?
On your phone.
Oh. My private keys here.
All right, so moving on to this chart. Now, this is very simple. And this is essentially just using EMA. So you have a short and a long-term EMA. And when they cross down, right, price went down. Same sort of thing. There has been a little bit of a slowdown. Price attempt to recapture this. You had what you call a golden cross, where short crosses above the long, and that can start to establish an uptrend. But as you can see, this now starts to risk the potential of reversing, because in a couple of days time, if price starts to or continues to hang around in these levels, and especially if it goes any low and breaks below that daily low, then what are you going to have? You're going to have a confirmed cross to the downside again, and that's going to pick up momentum, which could send you much lower. Now, when I say much lower, the zones that I would be looking at, look, we take it from level to level. If that daily starts to break down and you do lose that zone, then my next target would pretty much be the range low, which is at about 19,200. So anywhere within this zone is where I would expect support to be found. So I also wanted to show with the Guppy indicator over here. Let's just turn this off. So with this is a whole conglomerate of different EMAs which it uses, and you have these periods of where it contracts and then it expands, right? So the markets typically work like that. The markets work with a period of contraction where everything squeezes together and it consolidates and gets tighter and tighter, and then the market expands, whether that be to the up or the downside. So you can see, have a look at this. Here's your contraction, expands to the downside, contraction, expands to the downside. And now we're in that contraction phase again, and it's going to soon start leading into a new expansive phase. And you need to use this in combination with the other things that we're looking at over here, and understand that the probability is more likely that this expansive phase is going to go to the downside. So just keep that in your mind when you are deciding to buy the dip and things like that. And I'm not saying that it can't run up. It's all just about reclaiming certain levels and playing it from a risk to reward perspective. Look at all these massive wicks that happened every single time over here. So you had wicks on the daily, sold off. These are all shooting star candles, shooting star candle, shooting star candle, down, shooting star candle, down, shooting star candle. Now the question is, will this be down just like those ones and hold? The difference is that in these occasions it was holding the trend line, right? Now we're not holding the trend line. Now we've started to close below that trend line. And then plus, if you do go long, what is your upside risk to reward? You're going to come straight into resistance anywhere here around this diagonal, as well as your that underside resistance, which is coming in between about $27,000 and $28,000. So those are basically the things that I'm looking at. With that being said, quickly just wanted to give a quick shout out to my sponsor, which is OKX. If you are looking for an exchange that gives high sign up bonuses, you can get up to $10,000 by joining there or unlocking their mystery box. I have joined with them, so I will be taking a lot of trades on this exchange and exploring it. It looks like it has a lot to offer, but we'll cover that in a later stream. Now for the low time frames, okay, look, this is essentially what you're looking at for Bitcoin on a 4-hour chart. The momentum oscillators are starting to pick up, but the way that I personally see it is that any sort of bounces over here, I would be looking to use as an opportunity to build a short position, which is exactly what I'm doing. So moving on to an even lower time frame over here, which is the 1 hour, and this is one of the main charts that I'm looking at for Bitcoin. Have a look at this. So I pretty much just see it like this, right? You have your range high over here coming in at 24,207. Your range lows coming in at 22,658. You did break the diagonal trend line over there, which would have confirmed that your short trade idea is correct. And now we're pushing up towards the mid-range. So this is the reason for my short trade at the moment, and this is my expectation. I'm expecting that price could even potentially push above here, but I don't personally believe that it's going to hold this level. I think it might move around there a little bit and start to break down, retest again, and anything into this mid-range zone at 23,619, I'm willing to build into a short position, and I am planning on holding the short position over a couple of days. At what point I'll cut it is if it starts to hold above this mid-range, then I'll cut the short position and I'll flip immediately long, targeting back up to the top of the range over there. But if this idea works out, then my first target is all the way back down at the bottom of the range. If you start to lose that, then the picture can change quite quickly. Then let's just zoom out. Then you start to look at this again as a channel or wedge, whatever you want to call it, and then your next target would of course become over here. Lose that level, I'll just wait to see what happens at this wick over here. Lose that wick, and then things get ugly. Then you can start to go down all the way to about $18,000. So guys, pretty much that I think sums it all up. There's not too much to say. I just think that the market's at a critical point, and at the end of the day, just keep your eyes on the stock market, because pretty much I think that's going to be the determining factor of what happens with crypto. Is if the stock market indeed is turning over. Where's our stock market over here? If this is what is happening now, then crypto is going to suffer. Crypto is definitely going to suffer. So if you enjoy these videos, please make sure you give it a like. Also make sure you subscribe and hit the bell notification so you can be notified of any time that we go live. To stay up to date with my trades, all you need to do is follow me on Twitter. The link is in the description below as well. So have a look at that. And then for the BYBIT competition, that is in the description as well if you do want to join in on that. And as you can see, you just need to be about 30-40% in profit, and you'll probably have a high ranking. So we'll work on that. I see Rand super competitive, and we'll work on beating him in this competition over time. So guys, that is it from me. Thank you all for your time. Thank you for watching. I appreciate each and every single one of you. And until next time, I'll see you all on the next video. Cheers for now.